So chapter 2, we're heading into chapter 2. Chapter 1 homework is due today. So you can take a photo and upload it to the link that is in Canvas. Or if you want to give me the paper, you give me the paper. But I need a day to look over it, and then I will go over it on Wednesday. You don't have a whole lot of time today anyway. So for those of you that haven't had me in class before, I just look to make sure you attempted it. It does not have to be 100% correct. You get the little green check mark. You get a green check mark for doing it. Then at midterm, I convert all the green check marks to one mid-semester homework grade, and then I do the same thing at the end of the semester. Okay? Alrighty, so heading into chapter 2. Chapter 2 is somewhat of a review, a little maybe a deeper dive into cost classifications. So if you have me for managerial accounting, this will look familiar. If you didn't have me for managerial accounting, this won't look familiar. But I do give it out as kind of like a flow chart of costs to kind of help us decide what classifications our costs belong in. And it's nothing fancy, and actually, it looks a lot better online because it's a blue color. That's not the best color to print in black and white, but hey. And I'm no artist, so hey, and that. This is yours to keep. It's just kind of a guideline. Well, I'll show you how we're going to use it once we get closer to needing it. All right, so we're going to talk about, there's different terms that we need to make sure that we understand before we kind of head into cost classifications. And the reason being, and I know I remind you of this frequently, so if you get tired of hearing it, I'm sorry. But our bottom line, right, is what we're trying to improve. We're trying to, we own a business, we're trying to make more money, decisions that lead us in that direction. And so generally speaking, there's one of two ways where you can improve your profits. You either sell more stuff, right? You increase your revenues, or you reduce your expenses. And we do a little bit of both in here, kind of combining both of those towards that goal, but we really focus on lowering costs and then using the data that we've gathered to make those types of decisions, right? So as far as cost concepts and behaviors, I'm going to skip over the learning objectives here. I tend to use the terms cost and expense interchangeably. If you get down to semantics, there are some slight differences. I still use them interchangeably, just generally speaking. But a cost is something, if you think about, you want to separate the difference between cost and expense. A cost is a cash outlay, like you're paying for something with cash, right? And it can be past, present, or future. It doesn't have to be just present. But there are also opportunity costs, and you guys hopefully remember from economics, opportunity costs are basically the value of the next best alternative that you gave up when you made a decision. So you're always making decisions, right? I mean, even your decision to just come here, you gave something up, whether it's staying warm and toasty in your room or your apartment or whatever, or perhaps, having some breakfast, lunch, whatever it is, you gave something up to come here, your time to do something else. An expense, by definition, accounting definition, is a cost that's charged against revenue in an accounting period, right? So there are some minor differences if you want to get really technical about outlay costs, opportunity costs, and then expenses. I still tend to use the terms cost and expense interchangeably. It does no harm to do that, but if you want to break down the term cost a little bit further, you can see that there. This is just a review of GAAP financial statements. This is a basic income statement. This should look familiar. God, I hope it looks familiar. But maybe a slight difference here I'll talk about, but we have RPE Associates income statement for the year ended December 31st. And then in parentheses, you've got those zeros, which means that we've got to add 3 zeros onto our numbers in the financial statement. And that's just so that we don't crowd the page with a bunch of zeros. This is your basic income statement, sales minus cost of goods sold. You'll notice it says cost of services sold. And so in service businesses, there are costs associated with providing services to clients, right? Just like there are costs associated with selling products to customers. And so there's just a slight change in the terminology here. This is a service business, like accounting or a law firm. And usually you have billable hours, right? And that's kind of how you keep track of your costs. Billable hours usually represent the fee that the attorney or the accountant is receiving for their services rendered, right? So the sales revenue is what you're charging the customer. The billable hours are typically what you're going to be paying your lawyer, your accountant, that kind of thing, okay? And then that your gross margin, another word for margin is profit, so some textbooks will use the term profit, but gross profit, gross margin mean the same thing. Margin is extra, that's what the word means. So that's the extra sales revenue you have in excess of your cost of services sold. That extra has to go and cover marketing and administrative costs. In Accounting 101 in our old textbook, it was called selling and administrative costs. Marketing and selling tend to kind of go hand in hand. Some textbooks will use marketing, other textbooks will use selling. They mean the same thing, okay, in context of this. And so operating profit then is $4,200,000. Don't forget to add the zeros, right? This should look familiar to you, right? So we're starting with the basic income statement here. And the reason we start with the basic income statement is that you can see that we're using the exact same data that we use in financial accounting. In other words, that we use to create reports for that follow generally accepted accounting principles. We're using the same data to prepare the reports for managerial purposes. And all we're doing is we're taking the numbers and we're just kind of rearranging them or manipulating them a little bit just to kind of help us out, help our cause, the decision-making cause. We got some more things to review here. So there we have, this is a different example here. We've got Southwest Office Products. So this company obviously sells products, not a service. And so terminology changed just slightly. Cost of goods sold instead of cost of services rendered, right? But still, think of the word cost as an expense, right? And kind of following the same pattern. Then down here, we've got cost of goods sold. So you'll notice it says cost of goods sold, see following statement. If I'm purchasing products from a manufacturer or a supplier that they're made by someone else, right? There are costs associated with me bringing those goods to me, not just the purchase price. You can have shipping costs that are associated with that. You might get to take discounts, that kind of a thing. So this is the formula for calculating cost of goods sold. And again, this is Accounting 101. Maybe you remember it, maybe you don't, it's okay. This is the, and this formula, we're going to use it, we're going to apply it to any inventory account for which we need to maintain a balance of inventory. So you have beginning inventory plus cost of goods purchased, and the cost of goods purchased in this example include the purchase price, the merchandise cost, the invoice price, plus the shipping, transportation, shipping, they mean the same thing. Total cost of goods purchased, so beginning inventory plus goods purchased equal goods available for sale. Goods available for sale minus ending inventory is cost of goods sold. So that's where that number comes from. You can insert this statement right inside here if you want, or you can do two separate statements. Where do I get the cost of goods and ending inventory, or how do I verify that number? The cost of goods and ending inventory. A physical count, yeah. So my computer might say I have $445,000 worth of goods, but I also have to go around and count them, right? And so once a year, at least once a year, to verify those values in the computer. And as we know, they're not going to match. Why don't they match typically? Theft, spoilage, right? Human error in counting and stocking and all that good stuff. So there's a ton of reasons why they might not match up. But that's what the physical count is going to help us with. And then we've got, so, let me back up because I should say this too. All right, so we started here. We've got three types of businesses, right? And I always kind of like to make this like sort of review. We have a service business, which is our simplest form of business. And in Accounting 101, right, this is what we started chapters 1 through 3. All right, that's how we learned the entire accounting cycle with the service business. And then we added a merchandising business. In other words, a retail business, right? Those words we use interchangeably. And that was also Accounting 101, but we introduced that in chapter 4, and then we kind of carried that throughout the rest of Accounting 101. And so we're getting more complex, right? So the way this corresponds is RPE Associates, this one, that's our service business, right? And then I turn the slide to the next one, and I already forgot the name of the company, Southwest Office Supplies. That is our merchandising company, right? A little bit more complex. We buy products already made to sell to our customers. And then now we have our third and our most complex form of business, which is a manufacturing firm. So in manufacturing, why is it the most complex? Well, because now we have a whole other set of accounting activity that we have to record, right? I don't make my own products here or here, so there's no record keeping required, but I have a whole other set of activities that I have to record here. So this was Accounting 102, where you kind of get an introduction, and then 305, where we kind of go into more detail, right? And so here, you have an income statement, and it says cost of goods sold, right? But it says Three Rivers Fabrication. So the cost of goods sold comes from calculating the cost of goods manufactured. And the cost of goods manufactured then is used to calculate the cost of goods sold. So we're gonna have to talk about how that works and kind of how we move from the simplest version of a business, service business, into the more complex. And as I mentioned one day last week, I remember saying this, all of the things we learn in this class, all the concepts that we learn, we can apply to any of these businesses. We tend to stick to the manufacturing business just because there isn't any example that we can't find in here, because we've covered the whole gamut. We make our own, we finish it, we put it in the store, we sell it. So from beginning to end, there really isn't anything else we could encompass. It's all here, right? Some of the tools that we learned to apply, we might not be able to apply in a service business or a merchandising business, but for certain we would be able to apply them in a manufacturing business. So it just covers more. All right, so this kind of goes into the whole classification piece, and we're going to talk about this as I simultaneously have you guys look at the handout that I gave you. So there are two types of manufacturing costs. I don't know that I like the way that's worded there. But okay, different authors have different opinions, different accountants have different opinions, and it can be semantics. You could argue that's just, words with differing, but whatever. Product cost. So if you look at the handout that I gave you, at the top of the page, there is a box, and it says all costs, right? So if I were to ask you to write down every single thing you spend money on in your personal life, that's what you'd list everything in that box. It would all go in there, okay? So that's what a company's going to do. It all goes in that box. And then we start to classify, all right? So the first step in classification is deciding, if you're a manufacturing firm, right, what costs are a part of the manufacturing process and what part are a part of the selling process. So I like to kind of look at it this way, to think of it this way. If this is my facility, okay, here's my front door here. I'm no artist, by the way. And in my facility, I have my factory here, but I have my store over here, right? Everything I do is housed in this one facility. But this is cost, and the costs that are incurred in the factory are related to the manufacturing process. Costs that are incurred in my store are non-manufacturing. And that's the first classification or the first separation that I need to make with my costs. Okay? So we got to break them down. Now, you see the terms product cost and period cost, which I've put on my paper there, the handout that I gave you. Manufacturing costs we refer to as product costs because they are costs associated with making your product. That's pretty straightforward. The non-manufacturing costs, also known as period costs. The reason that they're called period costs is because they only benefit the period in which they are incurred. They show up on your income statement in 1 year and then they're gone. That's why they're called period costs. One period, that's it. Product costs, though, are technically assets until you sell them. So they benefit you for a much longer period of time, as you'll get to see here momentarily. Because they're really inventory is what they are, okay? You guys with me so far? All right, so now continuing with this. Product costs, these are costs that are recorded as an asset in inventory when incurred and expensed as cost of goods sold when sold. So if you look at the handout that I gave you, right? And it doesn't match identically here, but let me switch over here. And I know you guys can't see this all that great up here, but I'll do my best. All right, so if you're using this handout to help you classify costs, and you are starting off with either a service business or a retail business, these two right here, then these are just the right side of my paper, the right-hand side of my paper, right? This is the left-hand side. So my paper, the classification thing applies, right? But you don't need the entire paper unless you're talking about a manufacturing firm, right? So on the left-hand side, manufacturing costs, also known as product costs. They can either be direct costs or indirect costs. I'll get to the D or F later. They can be direct or indirect. Direct costs are things like direct materials and direct labor, and that means they become an integral part of the finished product. The other category, the indirect costs, is everything that doesn't fit in manufacturing overhead. We call that that doesn't fit in direct materials or direct labor. We lump into manufacturing overhead. So our three main manufacturing costs are direct materials, direct labor, and manufacturing overhead. Two of them are direct costs, one of them is an indirect cost. So what do we mean by direct and indirect, okay? Well, I use the same example that I used back in, let me go this way here. I use the same example that I use in accounting, managerial accounting. So direct costs that for a reasonable cost can be directly traced to the product. Now, I always say to the student, figure out what your product is. What is it? Is it a computer? Is it a sneaker? Is it a car? Is it a cake? In my case, it's going to be a cake, okay? A baked cake. So if I want to bake a cake, all right, I want to bake a cake. I'm ready to go. Tell me what I need to bake a cake.
Wow.
All right, yeah, I need ingredients. Yeah, let's just go with ingredients in general because I don't know that I could list all the actual, I would buy a box and I would add the eggs and the oil and the water and that would all I'd be. But if you're baking a homemade cake, you'd need flour and sugar and baking soda powder or whatever, and those other things, right? You need chocolate, you're making chocolate, you need cocoa. So anyway, we need ingredients. We can all agree to that, right? Well, the ingredients are my direct materials. They're a pretty important part of my cake, right? And they can be easily traced to the cost of the product. So, you know, if I'm looking at my cake here and I want to know, let's say it's a birthday cake, right? And I want to know how much it's going to cost me to bake this cake, right? So my ingredients, I can easily add up the cost of my ingredients, right? How much did it cost me for the flour, the sugar, the eggs, so on and so forth. That's what I'm talking about here, the cost, right? Because if I own a bakery, I want to sell this cake, but I got to figure out how much it cost me to make it before I can determine how much I want to try to sell it for, right? All right, so my ingredients, these are my direct materials. What else do I need? Yeah, I need a baker, right? The wages of the baker, that's me right now. The wages of the baker have to be considered, right? Into the total cost of my cake. And that's pretty easy to, that's pretty easy to figure out. This baker worked from, 6 in the morning to 2 in the afternoon baking cakes. His wages for that day get assigned to the cakes. Yes? Yeah, what's the next one? Okay, that's part of a bigger category. You're correct, but it falls under a little of a bigger umbrella. Anybody remember what it is? He's right. A manufacturing overhead. Look at you go. Okay. Manufacturing overhead. This is just everything else. This is like your catch-all. This is your catch-all category, right? So in other words, all right, if I'm baking a cake, listen, I could stand up here with the ingredients. I'm the baker. I can mix them all up, but am I ever going to have a completed or a baked cake at that point? No. What do I need? I need an oven, right? So that's part of my manufacturing overhead. I need an oven. I need a bakery to be standing in and baking it, right? I got to pay for insurance. There's all kinds of things that I'm going to have to pay for that no one really, they're not directly related to the cake itself, but they're indirectly related. Get it? Because without them, I can't have a baked cake. And so what's challenging, these two, materials and labor, those are easy costs to figure out as part of my total cost of baking my cake. What's a little more challenging is how do I give some of the overhead to my cake? Does anybody remember what I use? All right, maybe if I just put this up here like this, what's a POHR? That's not ringing a bell either, huh? Predetermined overhead rate. So when we give overhead to a product, we use a rate at which we assign overhead to objects. I didn't expect you to remember that, but that's what we're going to do, right? It's kind of where we're revisiting this. So it's really important that, and here we go, here's our indirect costs. And what other kinds of costs? Well, we have indirect materials and indirect labor. Now look at the handout that I gave you. If you trace it all the way down, you'll see that my manufacturing overhead, I have indirect materials, indirect labor, other factory costs, but I don't stop there. Other indirect costs, I give you some more examples. Depreciation, utilities, property taxes, insurance. You could add shipping and handling in there too, absolutely. But that depends. You could add shipping, which is dependent on a couple things. You could add packaging, that's also dependent on a few things. But yeah, all of those things could be, these are just some examples that I gave you, right? But why is it so significant that we categorize things in the right places? Because particularly with overhead, the way we assign overhead to the cake, for example, is different than the way we assign direct materials and direct labor. So we got to make sure we get the costs in the right categories. Okay? Make sense? Maybe? Now, if you look at the right side of the paper that I gave you, there's not a whole lot going on, right? If these are not manufacturing costs, then they're non-manufacturing costs, and they either fall into one of two categories. Selling, also known as marketing. You guys might want to write that on that paper, because remember I said this is so this right here, selling, can also, another word for that is marketing. I don't have a good pen here with me, but that's marketing or selling, okay? Those two terms are used interchangeably. So again, you can think of the little, this is my facility. The factory is the left side, the manufacturing cost. The store is the right side, the non-manufacturing cost. So over here, right, just trying to give you guys different ways of remembering things. Over here we have our direct materials, direct labor, and manufacturing overhead, right? Over here we have our marketing, aka selling, and admin expenses. And that's how we break this up. And if we have a manufacturing firm, then we have a whole other set of accounting we have to learn for all these costs. You guys have already learned the accounting from here on. We did that in Accounting 101, right? How we doing? Doing okay? All right. So I'm just trying to go through some of the classifications today. We'll do application on Wednesday since we don't have a whole lot of time today. A couple other things that I'll remind you of, and yeah, that'll be good for today probably. So we had some other terminology associated with these costs that we kind of use to do some quick calculations. So if you're a manufacturing firm, you tend to, well, no, let me back up. If you're a merchandising firm, if you buy products already made to sell to your customers, what is your main cost? What is the cost you're most concerned with? What's your largest expense if you're a retailer? Yes, and what accounts that? Cost of goods sold, right? Largest expense. And the reason I ask you that is because it also explains why I list it separately. I mean, theoretically, look, these are selling and administrative expenses right here, right? I could very well just lump that into the total selling and admin. I could put it in there, but then it would get lost in that total. And the primary reason that we like to highlight it by giving it its own line is so that we can see what it is. It's large. And that contributes to us also finding our gross profit percentage, right? So it's important that we list it separately because it's our biggest expense. For a manufacturing firm, they also would like to identify what their largest expenses are. Now, you could argue, and I'll get to that in a minute, you could kind of argue this, you know, textbooks, accounting textbooks don't typically change like Foundational accounting hasn't changed since it was created in the 1400s by a Franciscan monk, by the way. But primary costs, the prime cost, the main cost for a manufacturing firm is the sum of materials and labor. Add those together. Those are usually your two largest expenses. Okay? So that's a number, that's a quick calculation that they focus on. Conversion cost, the cost to convert materials into a completed product, is the sum of your direct labor and your manufacturing overhead. Now, why is that number important? And here's why, because look, if I have my ingredients here, here's my bowl, here's my little oven, no matter what I do, without the combination of the baker and the oven, those ingredients will never become a finished cake. Make sense? So conversion costs are the sum of your direct labor and your manufacturing overhead. And these just give us some kind of quick numbers. Now, as we kind of progress, you know, and technology is sort of taken over and human labor isn't as relevant, I don't want to say relevant, it's just, you know, things are so automated now. There's a lot of argument out there that that direct labor number isn't as big as it once was. It's not as big as it once was. Because if you're automating in lieu of human labor, where do you suppose the automation costs show up? If I'm using machinery to assemble whatever instead of a person, my direct labor costs are going to go down, but which other costs will go up? My manufacturing overhead. Yeah, so my automation is here. Do you see what I'm saying? So there's been a transition, you know, a little bit of direct labor moving into here because of all the automation. I mean, there was a time, people, where Sheets, you actually ordered your food from a person. You know? How many of you go someplace like that with your parents and they go up to the kiosk and they're like, real slow, and you're like, get out of the way. Let me do it, right? I do that to my husband because he's like, well, I don't know, I'm like, move. I'm not nearly as fast as my kids, but I'm a lot faster than him, at least. Could you? He gets mad. He says, I can't help it. Like I'm not that fast because I'll just take over and do stuff. He'll be like, I want to order this. I'm like, just give me your phone. I'll order it for you. I have zero patience. Anyway, so I'm not so sure that, depending on, is it, heavy human labor, heavy automation. So that could depend. But those two formulas you kind of need to familiarize yourselves with. You should know those, right? And then just some examples of non-manufacturing costs, period costs, the stuff that's on the right side. Now, on the handout that I gave you, I didn't go into the detail. I didn't go into detail about the different examples of selling and administrative expenses. So, that's what these are, right? And again, selling, also known as marketing, would be any costs that are incurred necessary to sell the products. And listen, what's the dividing factor here? The dividing factor here is once the product is completed, it moves over here. You're not selling something that's not 100% manufactured. Make sense? And so you have to kind of keep that in mind too, right? You're not going to sell products that aren't 100% manufactured. So that could be advertising, sales commissions that you pay to your sales representatives, and anything associated with that, and shipping costs can be lumped in there too. Administrative costs necessary to operate the business. So executive salaries, data processing, legal costs. I can't believe we didn't list accounting in here. This is an accounting textbook. Accounting, that goes under there too, right? So those would be any costs associated with administrative. I think that's pretty much everything that I wanted to cover for today. Hold on. Don't go anywhere just yet. I'm not telling you to leave just yet. So, lots of terms, a couple of different formulas there. We need to make sure we understand all that. You guys have any questions for me, though, before I show you something else here real quick? Little activity. Okay. All right, so I'm going to have you guys, I don't think we have time to do it right now. We have like 4 minutes. So Page 70 of your textbook. Maybe we do. What time is it? We have 4 minutes. All right, I said that, right? Yeah. Okay, so just real quick, and then I promise, and I won't give any homework or anything today. This is page 70. Page 70, this is chapter 2, problem 30, basic concepts. Now, I didn't talk about fixed or variable yet. I'll come back to that. I want to do one thing here, just product or period. That's all I want to do. I'll make it up my own directions. Okay? So using the handout that I gave you, product or period. Product costs or materials, labor, overhead. Period costs, you can even use this up here, right? Product costs, period costs. Even using my little drawing of my facility. All right. Administrative support for sales supervisors. Product or period? Period, right? Keyword, look for keywords too. Administrative support, right? Okay, letter B, assembly line workers' wages. Product, if you're on an assembly line, you're working in the factory, aren't you? Okay. Letter C, cafeteria costs for the factory. This is a little cafeteria over here. Product, right? Give yourself a visual, right? Controllers, the controller's office, the accountant. Period, yes, administrative. Do you think the controller's office is going to be over here or over here somewhere? You know, on a little second floor up here, all your offices, right? Probably. There's another reason that those offices won't be in the factories. Anybody know them? I'm going to pick on you, Danny, because I know you have a business that's sort of, you got a warehouse attached to a sales area, right? Right? Almost all those offices are up front, away from the warehouse, because where's the danger lie? In the warehouse. So for insurance purposes, you don't want to be near the danger. Okay. Depreciation on the building for administrative staff. Period? Period. That's okay. Keyword, administrative. Letter F, energy to run machines, producing units of output in the factory. Product, right? Overtime pay for assembly workers. Product, yes, assembly. And then salaries of top executives. Period. All right? All right, so we will pick up with that on Wednesday. We'll do a lot more practice, I promise. Review the classifications, though, at least, and the handout that I gave you. That will be helpful. Okay, anybody need to know what time they need to be anywhere else? Happy to tell you. No? Okay.